Is your nonprofit's month-end close feeling more like a scramble than a system? Well, today I'm breaking down why this close process is so critical to your nonprofit. And I want to know what's really slowing you down. Hi, I'm Teresa Clark, and I'm a seasoned CPA with 30 years dedicated to serving 501(c)(3) nonprofits. I have experience both as an internal CFO and an external auditor for nonprofits. So I bring a unique perspective to what it really takes to be a thriving nonprofit. To learn more, you can jump in and explore my website at teresaclark.com. For nonprofit financial teams, the month-end close of the accounting records, it's not just a routine task, it's mission critical. Yeah, I've found that in many organizations, what should be a structured and straightforward process looks more like a scramble. Reports are late, reconciliations are rushed, and decision makers are left waiting on numbers and unable to act or make decisions. Well, if this sounds familiar to you, I want you to know you're not alone. Many nonprofits find themselves stuck in this cycle of delay and the bottlenecks and all the things that make the month end close feel like a fire drill and not like a reliable routine. So let's unpack what the month end close is and why it matters to your mission. Also, let's talk about where those processes typically break down. Okay, to begin, let's define what is the month end close. Well, in simple terms, a month end close is how your organization finalizes its financial activities from the previous month. It's how you ensure that every donation, every payroll check, every payment to a vendor, every grant program expense is properly recorded and reconciled. So here's what that typically includes. It includes the process of recording all financial transactions, so revenue, expenses, payroll, etc. It includes reconciling the accounts. So that would be like a bank statement, maybe your accounts payable, your grant receivables, and then your restricted funds, just to name a few. Also includes making journal entries or adjustments at the end of the month. And it includes reviewing your accounting records, your books for errors. And then, most importantly, it's the process of producing those reports that are given to your leadership, as well as maybe communications to your funders, maybe your auditors, and definitely to your board. So, why is the month end close so important for nonprofits? Well, unlike a for profit business, nonprofits operate under a unique set of financial rules and they have incredible stakeholder expectations to meet. A delay or an error-filled report, it's not just going to affect your operations, but it's going to affect your credibility and then maybe even your funding. So here's some reasons why this process matters. Number one, it's about stewardship and transparency. Donors want to see how their resources are being stewarded, and delays in reporting are going to damage trust and they're going to impact your ability to communicate and show that you're making a difference with what you've received in the way of donations. The next area is compliance. You know, nonprofits, they are held to high standards, but more importantly, they should hold themselves to high standards. So you are stewarding resources for the good of the public, and you don't own what you're managing. So an accurate and timely close will help to ensure that accountability. And little side note here, it also is an important thing that helps to fulfill the fiduciary duty of your board. More on that topic available in my library. And number three, it creates better decision making. You see, leadership needs accurate data in order to make those strategic and forward focused decisions. So if the financial records are always late or incomplete, they're basically a team that's flying blind. This story that I'm about to tell you is a complete revelation and example of this truth. I have a client that I work for now. I didn't when this was happening. That's what prompted them to contact me. But their finance committee had been 1 year without a financial report. Yeah, 1 year they had not received financial reports. You might ask, how is their finance committee even meeting? That's a great question. It was actually their finance committee chair who said, time out, this is not working and we have to fix this. They had not received a balance sheet ever. And what they were getting was a spreadsheet that was prepared by their finance director. No sense of accuracy, no sense of reality. Did this really reflect what was happening in the bank account? And so, again, this finance committee chair said, time out, we need help. And that's when I was engaged to come in, help solve the problem, and to implement the systems that now, actually 4 years later, they're regularly getting very prompt financial reports. And it's beautiful to watch them making these forward-looking strategic decisions. At the last meeting I participated in, they were making some very big decisions about facility improvements and even talking about a cost that they knew would be on the horizon. They had an image of how far out it is and how well they're saving to get to be ready for that major purchase in the future. Very rewarding work. Okay, so number four, another reason why this is important is because cash flow and budget reality must be very visible. See, the cash flow and really the performance of a budget to actual results. So, what did we plan and what's reality? It's the lifeblood of a nonprofit. And so, a very strong closing process helps those in leadership stay ahead of what might be potential shortfalls and then take advantage of potential overages. So, why do so many nonprofits struggle with month end? Well, there are several issues that tend to trip up nonprofits: data silos between departments, manual data entry and reconciliation, outdated or disconnected financial systems, and over reliance on spreadsheet, and the lack of automation and standardized processes. You see, each of these will cause delays, errors, and burnout. So, we're going to be diving into each one of them in this series that I'm starting today. So, what's next? If your nonprofit's month end close is taking way too long, causing way too much stress, then we're going to take a closer look at what's slowing you down. Next week, we're going to tackle one of the biggest culprits: data silos. Yes, absolutely. Siloing things that do not connect together. They create chaos, and then there are just incredible frustrations when teams and systems aren't working in sync. I want to invite you to subscribe wherever you're watching this video, or come to my website at terisaclark.com so that you get the notification next week when the video is ready, so that you don't miss the second video in this 5-part series called Data Silos Are Slowing Down the Finance Team, and Here's How to Break Them. In the meantime, if you need help with a specific question right now, like you don't want to wait for a video, or you just want to talk to a human about your situation in your nonprofit, you can easily book a one-time consultation with me on my website, terisaclark.com, or through the link in the description right below this video. I look forward to serving you.